The buy now, pay later model is booming, but it isn't just a new way to pay. It's potentially a ticking time bomb similar to the 2008 global financial crisis. Now that's a big claim, but let me explain. Stick around to the end because I want to get your thoughts on my theory. Now, the GFC was a black swan crisis of the financial sort. We all know tons of people lost their homes. A lot of homes hit the market in foreclosure status, and it was just a mess, a horrible time, except for investors that swooped in and bought homes pennies on the dollar. Shout out to BlackRock. But this time, the buy now, pay later phenomenon could trigger a different type of crisis. Instead of a financial crisis due to asset prices collapsing, this could be a crisis of human welfare, as a growing percentage of the population relies on buy now, pay later for survival, for essential goods and services. As you can see in this chart, the buy now, pay later market has exploded, reaching a global value of over $230 billion in 2024, and is projected to continue growing rapidly. Right now, a majority of the buy now, pay later loan originations, about 61% as of 2022, are going to borrowers with subprime or deep subprime credit scores. So this massive growth is happening on a foundation of financially vulnerable users creating a significant and unquantified risk. And that's the key. It's unquantified. And we'll talk about that in a second. And of course, don't forget to like, share, and subscribe. If you've been living under a rock and somehow you don't know what buy now, pay later is, think of it as layaway, but in reverse. Now, layaway isn't as popular as it used to be, and I'm dating myself, but for those of you who may be just too young to know what layaway is, you used to go to the store, see a bunch of stuff you wanted, you would give them a deposit, they would set your stuff aside, and then once you were able to pay the full balance, you could take your stuff home. Buy now, pay later is different in that as soon as you see some items that you want, you can take them home with you. You put down a little money, and typically you make payments in 4 installments over a set period of time. And if for some reason you don't make the full amount of your purchase within those 4 installments or so, then you start to get penalized with interest or charges or fees. Now, similar to layaway, buy now, pay later doesn't require a credit check, which is different from credit cards that require a hard pull on your credit report in order for you to qualify for the credit card. And because of that, it makes buy now, pay later an incredibly accessible way to use debt to acquire the things that you want. The market now is dominated by the major players whose names you've probably heard of: Affirm, Afterpay, Klarna, etc. And while it started as a way for consumers to buy discretionary goods that they didn't really need, the bigger TV, the comfier couch, etc., the market has expanded to business. So now businesses can actually buy goods from other businesses and pay over time. The numbers show clearly how fast buy now, pay later is taking over. As you can see from the chart, an estimated over 90 million Americans are using it now. And as you can see, millennials and Gen Zers are more likely to use it, even though Gen Xers and baby boomers are also consumers of the BNPL platforms. Now, this is where it starts to get shaky. Buy now, pay later has shifted. What started as a way to finance a new gadget or an expensive trip has shifted to now needing it for basic necessities. So from want to need. And that, to me, is a clear signal of deeper economic stress in American households. What's deeply troubling is a recent survey found that 25% of Americans in the last year have used buy now, pay later to buy groceries. There's a lot of stuff that's troubling about this, but the disturbing trend is folks are using debt to buy perishable goods, which is different from maybe using debt to buy an asset that will return value over time. You're using debt to buy something that you consume that's gone in maybe 2 weeks or so, and then you're going to need to re-up on that debt to buy it again, in theory. And so you can see how over time that debt can snowball and start to stack up and become unmanageable. And while the GFC was caused by consumers who were given loans, again, they had subprime credit scores and they were given what's referred to as ninja loans, no income, no job, no asset loans. The folks really didn't qualify for them, and that's why they lost their homes. They were using debt to buy an asset, but they weren't financially prepared to maintain that asset. And that's one of the similarities between the GFC and this burgeoning buy now, pay later crisis, is that you still have a large portion of the population using debt to buy something that they otherwise would not be able to afford and something that they need. In this case, maybe not housing, but it's food. And it's actually housing too, because a lot of folks are using it to pay their rent. Because of that, I think that BNPL is a hidden debt bubble that threatens to weaken the entire financial ecosystem. Side note, think of a financial bubble as, in this case, a bunch of debt that's just growing in size. And if you've ever just like blown some bubbles in the backyard or even blown a bubble with some bubble gum, as the bubble increases in size and diameter, it's easier to pop the bubble. So as you have more debt in a specific area, one little thing can cause it to pop and unwind. In order to get buy now, pay later, you only need a soft credit inquiry. So it doesn't hit your credit score, and other buy now, pay later companies or banks, etc. No one else can see how much buy now, pay later credit you're amassing. So folks are able to, say, open up a line of credit with Klarna and with Afterpay and with Zip, etc. And the debt starts to pile up for individuals. And the data actually shows that BNPL users are twice as likely to be delinquent on at least one of the other types of credit that they hold. Just to add a visual, because I like to add visuals because I'm a highly visual person. I won't go through this entire chart, but as you can see, buy now, pay later users are typically below a credit score of 620. They are more likely to be brown or black. And if they are black or brown, they are more likely to be paying late or defaulting on their buy now, pay later. Users of BNPL, 27% or so have incomes below $50,000. And so these purchases are out of necessity, and 63% had multiple simultaneous loans. So I've covered the risk factors connected to individual consumers and how we see this hidden debt starting to pile up, and how the debt is fragile, and how individual consumers are using this tool in a way that it was not originally intended for. They're using it for essentials as opposed to discretionary purchases. But there's another twist. B2B is the new thing in this niche, where you have businesses who are now buying their input goods from other businesses using buy now, pay later. Now, on the surface, this is a great tool, and it's been celebrated as a strategic tool for business growth. And if used wisely, it most certainly can be, because it can help a business with their cash flow. So if you have a business, especially one that's capital intensive, it needs a lot of inputs to survive, that cash flow is the lifeblood of your business. And so what buy now, pay later allows for a business to do is get all the input materials they need without having to pay up front, so they have more cash on hand at the end of the month. And it prevents businesses from having to go out and get loans where they have to maybe, jump through more hurdles, go talk to the banker, yada, yada. Now, this subset of the buy now, pay later market, the business subset, is growing rapidly, just like the consumer set. The trouble is, we don't really know how it is going to hold up under significant financial stress. So a sudden economic shock, recession, etc., we don't know what will happen. And the same issues are present, meaning there's no tracking of how much debt businesses are piling up using buy now, pay later mechanisms as well. The regulation hasn't kept up with this new niche, similar to the cryptocurrency niche. Cryptocurrency in the form of Bitcoin has been around since 2009, but the United States is just now starting to create regulation for the market. So on the surface, it is a great tool for small and medium-sized businesses. It's been projected that there's a $2.6 trillion lending gap in the small and medium-sized business space, meaning that's the amount of capital that these businesses need to thrive, but they're having trouble accessing, and buy now, pay later allows for them to access it. The thing is, the reason they're not able to access the credit is because that debt would actually hurt them more than help them. So how do all of these pieces, the buy now, pay later for groceries trend, the hidden subprime debt bubble, the racial disparities, the growth in businesses using these tools, the issue is they're creating a new kind of risk that's very similar to the 2008-09 global financial crisis. Remember, in 08-09 or leading up to 08-09, folks who had subprime credit scores were given access to debt to buy homes. They eventually defaulted on those loans and the whole scheme unraveled. Today, we have a bunch of individuals with subprime credit who are given access to debt, and they're amassing incredible levels of debt. And unfortunately, they're doing it for essential items versus discretionary. So they're doing it for food, for shelter, for education, as opposed to just a new TV or a vacation. Now, here's the pin that could pop that potential bubble. The Consumer Financial Protection Board, that does great work to protect you and I against unfair lending practices, etc. They're in the process of creating regulations to govern the buy now, pay later market, which is a good thing. We need regulations so that people aren't harmed. But the challenge is, if you've been using buy now, pay later to buy groceries, and then regulation comes in, and the regulation says you now have to get a hard pull on your credit score to qualify for Klarna or Afterpay, etc. And let's say you're denied. So now you're not able to access the lifeline to buying groceries, paying your rent, buying clothes for your kids' school. What happens when that lifeline for millions of Americans is abruptly cut off? I don't know the answer to that question, but in theory, it could be cataclysmic. We're talking about a human welfare crisis like nothing we've seen in our lifetime. When people can't feed their kids, they're willing to risk it all. And what I'm positing is if the regulations that come in for BNPL are not written in a way that's sensitive to this potential cataclysm, we could potentially have a civil unrest situation on our hands. And so I wanted to put it out there, not to scare you, but I wanted to share it with you so that we can talk about solutions. So the moral of the money here is if there's any way that you can avoid using buy now, pay later to get your essential items like food and shelter, try to find a way to do that. And if you do have to use buy now, pay later for your groceries or your rent, please be mindful of how much debt you're taking on, when your payments are due, create a tracker or a spreadsheet or something like that so that you don't lose sight of when your payments need to be made, and so that it doesn't get out of hand for you, because that data shows that that has been an issue for many. Lastly, we can make our voices heard. You should go to the CFPB's website. They've done extensive research on the topic, and they are preparing to release proposals for regulation. Now is a great time for you and I, the consumer, the business owners, to reach out and say, hey, we've been made aware of this potential issue. Are you thinking about this, CFPB, as you're creating your regulation, so that the regulation that comes about can be sensitive to consumers who are using BNPL as a lifeline? I hope this video has been helpful. I hope it's been informative. It's good for us to discuss these issues so that we can create solutions. And if you like that type of content where you're not just hearing doom and gloom, but we are exploring solutions and ideas together, then you're in the right place. This is the right community. Make sure that you like, share this with another conscious being, subscribe, and I'll see you in the next video. Peace.